RCTAA Cafe. This podcast is brought to you by the Reserve Component Transition Assistance Program, with Reserve Component Transition Assistant Advisors of RCTAAs covering every state and territory. RCTAAs are there to provide service members and veterans with information assistance with assessing their benefits and entitlements earned through their military service. This podcast episode is one of the VA mortgages. My name is Tyrone Finch, RCTAA from New Mexico, and I am joined by my RCTAA counterpart from Illinois, Mr. Charles Helmholt.
Hey, thanks. With us today is Brandon Wooley. Brandon has over 20 years of experience in the mortgage industry, with 12 of those years focused on VA loans. Brandon has earned the title VA Mortgage Guru through his deep expertise and unwavering dedication to his clients. Specializing in VA loans, which annually make up about 70 to 80% of his loan production, Brandon is passionate about serving those who've served. His commitment to veterans is personal. His grandfathers and his wife, Nicole, are both proud military veterans. This connection fuels Brandon's mission to make homeowner accessible and stress-free for the military community. Known for his integrity, reliability, and results-driven approach, Brandon is a trusted guide for families navigating the path to their dream house, while adding the extended value of being both a licensed financial advisor and credit advisor. So, Brandon, why don't you kind of talk to us about sort of what makes you the VA mortgage guru?
Well, the first thing is I own the .com. So, I mean, right off the bat, I mean, total validation right there. But I think, you know, one of the struggles in the circles that I've run in and still run in is we're very careful not to be like, oh, we're the VA expert, we're the VA guru, because, you know, it's one of those things to where one of the things that makes you an expert and a guru isn't exactly that you know everything, but it's that you know where to find the answers.
Right.
You know how to adequately get those things and explain, you know, each situation to each veteran client or family, right? And so it's more of a moniker and it's a branding, of course, but I mean, just in general, like being a mortgage professional, you know, focused on VA loans, you know, the general answer is just that. Really, I think it starts with a passion. Not to get too complicated, but, you know, in my opinion, in any profession, you know, it comes down to two things: a willingness and an ability. And so there's a lot of people that are willing to help, but they may lack a lot of ability. Or there may be a lot of people that have a lot of ability, but lack the willingness to take the time to honestly, you know, serve people in an honest way. And so I think it just takes, you know, both of those things, the willingness and an ability. And anybody possesses that. And I just happened to go into the, you know, the VA loan realm, and, you know, based on my experience with my wife, helping the, you know, Yellow Ribbon program, pre and post deployment. And so getting involved that way too, it's just, you know, over time, it's just became my main focus. And so again, back to your question, you know, part about being the VA mortgage guru isn't necessarily being the know-it-all, more so than it is a person that genuinely cares, but also has the ability to give people the answers they need to make informed decisions. You know, not make mistakes based on lack of preparation, you know, those types of things. And then looking at it from a financial standpoint too, like some people have an idea like what direction they want to go with a mortgage or a refinance. And sometimes it takes somebody to go, hey, you might want to consider this based on your current financial situation, how long you're going to live in that home. There's just extra things, I think, that if you can see, you know, 3 or 4 steps down the road based on experience, and sometimes the willingness to sacrifice your own commission, you know, just doing the right thing. And I think that's, in my opinion, that's what makes, you know, somebody I hate to even say it, but repeat it, a guru, is the ability and willingness to go that far genuinely for your clients' well-being.
So Brandon, you talk about you own the .com. So that's VettedVA, VettedVA, all one word. So my question for you is, like, what is your actual role in the group?
Well, so my website's the VAMortgageGuru.com. And so it's really, I'd like to do more with it. I won't lie. Like I stay true to my business and my family, and that's really about as much time as I allow. I'd like to do more and provide more information on that website, but I do participate in VettedVA as a moderator. And so VettedVA, at VettedVA.com, where you can find people in each different state, because I'm not licensed in every state, but I can say the other people that I share that same common vision and that passion and mission with through VettedVA, for the most part, I would vouch for these other people to be just like me, in my opinion, and honestly, I probably get more referrals from those types of people that are my competition, other loan officers, than I do real estate agents, because we know and trust what our ability and willingness is to help a person that we have in front of us. Even if we can't, we know where to send them. So through VettedVA, it's been a, through that camaraderie and that shared experience of getting to know and trust each other, serving the same mission through VettedVA, to serve veterans. And when it started, oh my gosh, 6 years ago now, it started with a, Marine that he wasn't too experienced in mortgages, knew he didn't like how things were being done in the mortgage industry. And he's like, how do I get information to veterans? Because he couldn't get it himself without this pressure of being solicited, without this ulterior motive. And so he searched within the industry. And as much as I hate social media, fortunately, it's a way that's connected like-minded people, and this is a great example of that. And so I think we have almost 85,000, veterans in the group now after 6 years, and it's grown organically, no marketing. And, and little over 100 moderators that service those questions about home ownership, mortgages, those things. And so what's that? Go ahead.
Sorry. Well, for the listener who's tuning in, who may not even know what VettedVA is, can we take a second step back and then kind of just lay out what that is and what you guys do there?
100%. That's where I was going to finally get into that.
Gotcha.
No, so, I mean, I think and I guess where his question was going, whereas, what is VettedVA? And so the purpose there is we wanted to create a community where veterans can come and come answer those questions, because you search online, you get tied in with companies that are very self-serving. You get tied into groups that are very self-serving. It's like, hey, I'm buying a home in Missouri. And next thing you know, you have 47 people messaging you, hey, call me. And no one ever actually answering the question. And so within VettedVA, we created very strict rules to create a community where veterans can come and they can post anonymously, but have questions and get those answered without all this extracurricular. Now we will naturally and organically get loans, but like we're not allowed to private message people. It's completely forbidden. We don't allow like interest rate posts unless it's specific to a certain program or something. If we don't allow posts about professionals if they're not vetted, no outside links unless it's a government link, because we want everything to be strictly about the question and that we can answer for the veteran. And so it's a safe place. And if they're professional, we have another group for professionals. But we wanted to create a community where veterans have a safe place to get all their questions around home ownership, home buying, the market, everything that they can ask, to help arm them with the information they need without this other, extracurricular pressure, because it certainly can turn a veteran off in their, home search and their process.
So Brandon, I got a quick question, another question for you. So how does the veteran qualify? What does the veteran have to have before they walk in the door to come see you or they get in contact with you guys? What should they qualify?
That's a good question. And so the simple answer is, under any mortgage, I call it CIA, credit, income, assets, right? Credit's got to be good, income, assets, whatever those things, the standard is for those to qualify, right? The good news about the VA loan is the VA loan has the most most flexibility around credit, especially with past issues. Most people don't know that. Income, There's a lot more flexibility around debt to income ratios, assets. There's a lot more flexibility around that. And sometimes you don't even need them because it's zero down, right? That's part of the most common benefit of the VA loan. So those are the core CIA, but also the VA loan, it's unique because then you need that certificate of eligibility to qualify. So you have to have an eligibility. And if you have, in chapter 2 of the VA lender handbook, without boring you with the entire presentation on that, it's, and people can go in there and it's like the Bible. There's sometimes a lot of interpretation. So you can go in there in chapter 2 and it'll give you everything from, basic reservist time all the way to being a surviving spouse. And it'll lay out like what's going to make you eligible for a VA loan. And yeah, somebody like myself can help in each individual situation. But I would say if you're going to start, just Google it. Chapter 2, VA lender handbook. You'll pull it right up PDF. You look through it. You'll find what probably matches you. And, if you have a question, you need to ask the mortgage professional or somebody like me, or go to VettedVA, where you can get an answer without a loan officer trying to get you to do an application. You just want to get the answer. So that's probably the easiest thing without going into a whole, dissertation about eligibility.
Okay. Well, so what are some of the things that a veteran, what are some of the kind of do's and don'ts of the VA home loan? I know there's certain things you can buy with it, certain things you can't buy with it. Can you kind of explain some of those different areas?
Yeah. So I would say the first thing, I know this may sound self-serving, but based on years of experience, okay? I have neighbors here in Missouri that are very close to me. Their headquarters are, and they're the #1 VA lender in the nation. And my first thing is advice is don't necessarily get tied into them. They have a much higher minimum credit score. Their rates and costs are a lot higher. So I'm not going to name any names because that's something we don't do in VettedVA either, even though we believe it like with a passion. So, but if you search online, you're going to find companies like that. So you got to be careful. You got to be careful who you end up using, because if you don't know, you don't know. And next thing you know, you're closing a loan where you paid a higher interest rate and or cost, and you just have no idea, So, so I would say that's the financial piece of it, like what not to do. And we can talk about the difference between a broker and a lender, in a minute. But if I say anything else, you can never plan too soon. Because one question I always ask that's not on an application is, what do you want your maximum payment to be? I'm working on one today where they told me $2,200 a month, but the property they found is $2,750 a month. Yes, I can get them approved for that. But as a fiduciary, as an advocate, I want to help them say, look, I can get you the loan, but I want to make sure you're comfortable with that payment. Right. I don't want anybody going into bankruptcy or foreclosure because, I didn't hold them accountable to what they told me, and I advised them appropriately. So I like people to have an idea, okay, what's going to be comfortable for you based on where you're PCSing, based on your next steps, based on what your retirement pay is going to be versus what your current active duty pay is. Keep these things in mind, because I can just qualify you, but I want to make sure I'm qualifying you based on what's a fit financially. So I think people can think about that. It never hurts to start early, because if there is credit issues, you can work on those. Something very common right now, federal student loan debt, for whatever reason, like I just had one, the same one I just mentioned. Federal student loan debt popped up for, 120 to 149 days on a $3,000 federal student loan debt.
Wow. So
I'm gonna help them get it deleted, but I got them pre-approved with a strong explanation. But it's very common that those things are popping up, dropping credit scores. But they didn't even know it happened because the deferment ended in 2024, and then it didn't report until January. But they didn't even know until we pulled credit, right?
Yeah.
And they're in a situation where they're desperate to get out of where they are, So let's say we were started, months prior, then maybe we could have caught that and then planned ahead of time, so it's not as stressful on them. And it's no shame to them. It's just, if somebody's watching this, hey, get started early, because you never know, even if it's something that's either erroneous on your credit or not your fault or just needs to be managed or addressed, then you can do that, ahead of time. So, but
So
also
Brandon,
planning for retirement and those things, because it can affect your income, what's qualifying income. So there's a lot of reasons to start early, where the stress the deadline is farther away. So the stress is removed and you can focus on the logical part of the decision-making, and gives your loan officer, enough time to, help advise you as well.
So quick question on that financial part. So let's say a person has taken care of their CIA, their credit, income, and assets, and they got a good score. So that lender broker thing, what is the steps in those two, in that process? And explain
So
those.
the difference between lender and broker, it's really, broker versus, say, mortgage banker, or just banks in general, or even credit unions. And I'm biased because I'm a broker, but I've worked in all. I've worked at a bank. I've worked for a retail lender, which is like a mortgage banker, and a broker. So I am biased, but I also come back to brokering because I feel like brokering provides the best lending options and lowest cost and or interest rates in general. Right now it's, part of that is there's so much margin built in terms of profit margin built into the retail lending side, because they have a lot more overhead. They tend to have offices where, like, I'm just the broker guy. I have an office, $400 a month, but I work from home the last 7 months. So I have little to no cost. I have no overhead cost to cover. And I am shopping that rate with multiple different lenders on who has the best rate, who has the best service, who has the most likelihood of approving this unique property or this credit situation over these others. And so I have that experience with them in helping find those people, but they're competing for my loan technically. So we typically have the better interest rate, even though these retail lenders may sell the loan to those exact same servicers or wholesale lending people. They have a lot more margin built in, where they have all of these people under their employment. There's a lot of fixed overhead, and then with banks just typically don't have as much experience around VA loans or government loans. And so they have those margins built in too. And so they're typically not as competitive on the rate and cost either. So, which, don't get me wrong, rate and cost isn't always the most important thing. If you're going through divorce and you have this deadline, you know what I mean? Like, sometimes it's situation based, because you could call another broker that knows absolutely nothing about VA loans, but call another retail lender and they may be an expert. I hate to use the word, but, really good at VA loans. So you may pay a little bit more than some other person you called. So it also just depends on who you get as the trusted professional that you're going to rely on to guide you through whatever mortgage situation it is.
So what I'm hearing from you is that they both operate sort of the same. If you were to take one thing away, what would be the one difference between the two? If a veteran was searching for a home loan or getting a home, that would change him whether he go lender or broker. Is there any one thing?
Well, just real quick. So the process would normally be you talk to the lender, you're talking to an individual. Hopefully that person has the expertise to guide you, listen, advise you. Then you're doing an application, right? From the application, they're going to pre-approve you. And then from that point, then say you go under contract or it's the refinance. Once it gets submitted into underwriting, that's where the difference is so a lot of times those people, they typically have their own in-house underwriting, whereas we as a broker will rely on the underwriting of the wholesale lender themselves, because they're funding it for us, whereas a retail lender is technically funding it directly. And then it may end up with that same lender, but they fund it and then sell it. Whereas we don't. We let them underwrite it, they fund it, keep it, and go from there. That's the difference, is the underwriting is it typically, and I mean, obviously the cost and rate, let me repeat that, right? But in terms of the process, that's the difference is, our underwriting's with the lender, retail lender typically has it in-house. Everything else is pretty much the same.
All right. So when I'm out doing, when a lot of us TAAs are out doing outreach, I know I get approached all the time and I'm asked about like some of the kind of special areas that a VA home loan can be used in. I'll give you an example. Last weekend, I was doing like a crossroads event, and a kid came up to me and he's like, I'm a young guy and I'm looking to buy a multiplex unit and then live in it. And then is that something that they can do? So if you could talk about some of the kind of gray areas, and then specifically if there's some things a VA loan can't be used for, if you could address those as well.
Yeah, no, I love that topic, because when I run into veterans, I'm just like, yeah, I thought about using my VA home loan. I'm like, are you married? And you're like, no. So you don't have kids? No. I'm like, living in an apartment? Like, yeah. I'm like, go find a multi-unit, because as long as you live in it as your primary residence, then you can use your VA loan. The only time you can use a VA loan that's not your primary residence is if it's a former primary residence that you've now vacated and it's now a rental property, and that you're doing a straight streamlined refinance, not taking cash out. It's just interest rate reduction. That's the only way. Otherwise, it has to be your primary residence. So when you're looking at 1 to 4 family, then that's the trick. It just has to be your primary residence. You just have to move into it. And then when you're getting qualified, what a lot of people don't realize is how you can treat these other units. Okay. So if you don't have a history of a Schedule E rental income on your tax returns, a 2-year history, then you can't count the profit on the qualification, but you can still offset the entire mortgage payment, up to the entire mortgage payment, with the other rents. Okay. You don't need a rental agreement even. So I'm sorry, that's on vacating. So you're moving into this 4-unit, let's say, and you do have these other lease agreements that you're either taking over or you're moving, your sister in one of the units. I've had that so often lately. So many families are sticking together, depending on the situation. But like, you can use the rents from those other 3 units to offset up to the entire mortgage payment. So you could literally buy the home and base it on 0 net mortgage payment in your qualifying debt to income ratio.
Oh, wow.
So if you have somebody that's on, that has their service connected disability and they're getting that monthly amount, obviously 100% pays more, but maybe that's all they have is income. And, they have a car loan and maybe some other debt, and they just, can't necessarily qualify with it all together, but they like to own a home. Like, it's a perfect way to look at it, Also, if you're 100% or even service connected, whatever state you're buying in, you must, if you have a service connected disability, you must look into the state exemption of real estate taxes. Each state has a different exemption, and definitely you got to look into that, because that elimination of those taxes, say in Texas for 100% service connected, I mean, gosh, some taxes are astronomical, $700-800. That makes a big difference a month.
Now you're in Missouri, right?
Missouri.
Yeah.
The difference in Missouri, which there's legislation going on for a couple of years. Don't go there. I'm gonna work on it. But there's an income limit. So if earned income, if you earn up, over a certain amount of income, you don't qualify. But you go to Arkansas, all you got to do is show, it's your permanent total, and 3 on your award letter, answer yes to the 3 questions. Oh, here's your exemption before you even go under contract. So it's just night and day. Each state's different. You have to explore it. And, most people don't even know about it. So anyway, multi-unit, love the idea, but also definitely got to check on those state taxes.
So Brandon, what if they were starting from the bottom? They want to buy land and go from there as far as building a house. Is there different in that process?
Great question. And the challenge with that is that there's a limited number of, so yes, if you go, oh, the VA allows it, great, that's true. But now you got to take somebody with experience and you got to look at it 10 steps ahead, because otherwise you can fall into some really big traps and it could cost some money and time based on a lack of knowledge, which then if the loan officer doesn't know a lot, then you know, and admittedly, I learned it by making mistakes. Like, hey, let's go. And then you go, oh, I didn't think about that. Well, that's something I need to know and prepare this veteran for 4 steps ahead, because there's only a couple lenders that really even do it, and they each have different rules around it. So the favorite lender I like to use, I love the lender, but what I don't like is like they have this admin fee. And so you have to factor these in, because it sounds great. And in this market, you know, for the cost of home prices and interest rates, the cost, you know what I mean? Like, it's like, it just sounds like a great idea, especially with 0 down. Okay. The challenge with that is 2 things. The one is that, especially in the Midwest where it's very rural, you get builders that they're good at building. They're not good at admin stuff. They don't want to be even. And you got to have them cooperate with errors and emissions and all this paperwork. And sometimes they just kind of give up. They're like, look, I don't want any part of that. And it's hard to find a builder that you like, that can build the home you want for the price you want. Then you got to get them to go through this process. The other thing is, if it doesn't appraise, then now you've gone through this process, pay for an appraisal, it doesn't appraise. Well, now you're stuck having to bring money to cover the difference. Well, if you're doing the VA, you know, OTC, one-time construction loan, one-time closed construction loan, then it will, you typically don't have that money. Mm-hmm. That's why you're doing that loan, mm-hmm. right? And if you already own the land, the equity helps, but one lender counts it as a refinance, and it totally wrecks the process. You know, like I'm not trying to disparage it, but I'm just trying to be as transparent and real about it as I can. And on the other side, the other lender has a better rate. They're more knowledgeable around it, but they charge the admin fee. And you're not allowed to pay on VA loans. Veterans are not allowed to pay the interest along the way. So homes are taking longer to build because of how busy builders are. Well, if it takes 12 months, well, now you're building in 12 months of interest. There's draw fees for each part of the process to go and check the progress of the project, the home build, and then that admin fee, and that all gets rolled in with your cost of everything, land plus build together, standard closing cost, the cost of dogs that want to bark in the background. No. But, so you have to roll all that in together, and it's got to appraise for that. And it's just a long shot, which when you have the builder, you have the plans, at least what happens though is you do the appraisal up front. Once you have all that, the builder's approved, then they'll actually order a VA appraisal based on the plans, you know, so then you'll know right then.
Oh, so they build that cost into it when they do that? Okay.
But that's the thing, is then they send you a fee sheet, and like somebody like me that's really particular about the numbers, those numbers can change. Like they change the admin fee based on the price going up 20 grand, the build going up 30 grand, doing this. And essentially the way they get around it is they have the builder pay it. Well, then the builder just makes it part of their cost. Mm-hmm. And they'll say like, well, the builder's paying it. I'm like, the builder's just not going to pay this admin fee. And admittedly, the admin fee is expensive. So we looked at it 18, I'm trying to do math now in my head here. So it's 8 years ago ourselves on our VA loan. Went through this process for a year of getting plans and everything else done. And then they kicked it back, and I saw the admin fee, and I'm like, I'm not paying that. And they say, well, the risk of the loan, which I know the statistics, less than 1% of VA loans default. It's basically a riskless loan doing a VA loan. But anyway, he who holds the money holds the decisions.
And Brandon, I got one last thing on that. So I had a soldier recently asked me about, could he use his VA loan? He's already purchased his home.
Yeah.
How would he go about getting that under the VA side?
You're talking about, so he purchased it without a VA
Yeah,
loan.
yeah, exactly. Now he was a National Guardsman. He did the overseas tour. He came back. He has a certificate. Now he wants to, hey, can I get a better rate? How can I use my VA loan on my current house? Or
Okay.
can he?
Can I back it up one on the VA, on the construction?
Go ahead.
I'm going to finish on the VA construction with this, is that it's still a great product if you have to do it. But if you have equity or you have a down payment, I hate to cost myself commission, but again, doing the right thing is doing the right thing. And ultimately, in my opinion, what works the best is if you could find a builder who will both build the home, do it on their dollar with their bank, and then you just do a VA purchase of the finished product. Then you're just doing a VA purchase. Okay. Maybe they'll want you to be pre-approved up front before they'll start that process, whatever. The only risk, in my opinion, I won't say only risk, but the one that I can guarantee is a risk, is what happens to rates. If rates go up between now and that time when it's done, now you got to pay that higher rate. Okay. We don't expect that to happen. Can't guarantee it, but that's the risk. Maybe you get a lower rate too, though. Okay. But then you don't have to pay that admin fee. You're not going through that process. Okay. The other option is if you can get a construction loan with a local bank, even if it has a balloon note, some sort of adjustable rate in the future, if you can get them to do the construction piece, then, which is going to segue into your question, actually. So they get that construction loan with the bank. So it's a conventional loan to build the home. Now we look at the VA refinance, right? So they have a non-VA loan to build it because they wanted to avoid this admin fee, let's say, right? And they keep everything local. They get their draw money local. They don't have to go to, New Jersey or wherever our lender is to get that money. Get the home built, not a VA loan. And at that time, we'll look at it financially. Does it make sense? Here's the VA loan. So it's easily done, but you have to treat it, even if they're not taking any cash out, you have to treat it like a true cash out. So they're going to require the termite inspection like you would on a VA purchase. Funding fee. So if you don't have a funding fee, you have at least 10% service-connected disability receiving compensation, you won't have a funding fee. If you do, and it's your first time use, then you should be able to get out of that with, the lowest of the VA funding fee. If not, and it's your second time use, and you don't have a service-connected disability, you're looking at 3.3% on the funding fee. Okay. Which you would on the purchase anyway, unless you had a down payment. Okay. But it can be done. You could just, for me, I just look at, okay, does it make sense based on rate, the funding fee, if there is one, cost, those things. And, and maybe they could pay off some debt and do 100% cash out. Depends on the situation, but it can be done for sure.
So if there is one thing that you've learned kind of going through this process with thousands of veterans, hundreds of veterans, what is the one thing that you think that they need to know about the process or VA loans in general that you wish that that you could tell them ahead of time?
Yeah, I mean, I think it's just find somebody that's trusted. I mean, I know that, again, it's self-serving for me to say that, but based on my experience, I mean, if I was out of this business, this is what I would say, is find somebody that knows the VA loan, because this kind of piggybacks on the last answer I just gave, is there's a lot of local banks. There's people that don't do VA loans, or they do them and don't understand them, and they will deter the veteran from exploring the VA loan. Anybody that deters a veteran from exploring a VA loan is somebody you don't need to talk to, because the VA loan is the best loan on the planet. And to me, it's the easiest to obtain. And I mean, short of having the, most brilliant credit with 20% down, like the VA loan's probably going to be the best option.
Yeah.
Because at 20% down with great credit, you can get a good conventional rate, no PMI. So it'll be close, but anybody that deters you from doing a VA loan, run away from them. But on the opposite side of that, to finish answering the question, is find somebody that you trust, and if you like them and they don't know anything about VA loans, you can at least trust them. So maybe they have the willingness to help you, but maybe not quite the ability. Send them to VettedVA professionals only group. We'll answer their questions. Like, we're going to help that professional help you, because it doesn't make us money, but we know that if we're educating another professional, they're gaining more experience for not only that veteran, but the next veteran. And that's how we try to solve this, through VettedVA, circling back there too, is we solve the lack of knowledge just through serving, not just directly to veterans, but to other professionals. But find somebody that is willing to learn about VA if they don't already, or find somebody that knows a lot about VA and lean on them. Get all the answers you can, because there's a lot of bad information from previous times. It's there's just so much misinformation around appraisals, the time it takes, how hard they are, getting people to accept VA offers, and where you can use somebody experienced that can help you navigate those things and bust those myths, if you will, to help you both leverage your the benefits you've earned, but also the benefit that is really what's best financially, typically, as well. So
Brandon, I'm gonna talk away, delve into your crystal ball for a second. If you could see the market over the next year for the veterans out there, is it a good time to buy a house with the current situation, or would you say hold off a little bit, or how speculative should they be in today's market by going out and getting a house now?
Such a great question. So you asked me what time it is, I'll tell you how the watch works. So just real quick, like right now, you got the Fed making announcements, Powell's making for the Fed is discussing things. And, there's a lot of sentiment back and forth on how they feel about that stuff. Like, people think the Fed's going to cut rates so that'll help housing. And, I won't try to get political here. And as much as that may help, like, honestly, sometimes things just have to play out. Okay. Just like the recession that's been looming for 3 years, it's, more than likely, like, we're in that zone where it's probably going to happen in the next year, which means job losses. It may be some tough things, but that's good for interest rates. So, so if I say anything, I always think it's a good time to buy, but also depends on your situation. How long are you going to live there? Because if you're PCSing and you're only going to be somewhere 2 years, maybe even 4 years, or you're getting a job and life's going to change, keep in mind how long you're going to keep that loan, how long you're going to be there. My first personal thought is, if I buy a home, if my world imploded and I had to turn around and sell this house today, how easily could I sell it without completely taking a bath on it financially, paying a real estate fee or whatever it may be, right? Almost like like having your go bag, almost like an exit plan. Like, how easily can I vacate the current situation and transition? And so I think it's always a good time to buy. It just depends on how long you're going to be there, because housing prices aren't really going to change. It's simple economics, supply and demand. If you're waiting for prices to come down, you're losing. You're losing equity. You're losing opportunity. Does that mean go out and just buy something to buy something? Not necessarily either, because you're paying a lot and you want to make sure the home is a functional fit for you and or your family. Don't just buy it and then you got buyer's remorse in 3 months, because now you got to either sell it or just live in it. And so maybe the next house, but be ready, right? Again, you can never plan too far ahead. Be ready. So if the right house comes along and you can go get it, go get it. And don't buy it expecting rates to drop. Buy it based on your budget. And if rates do drop, then just take advantage of it when that time comes, because refinancing VA to VA is the easiest thing in the world as long as it makes financial sense. So, as far as crystal ball too, like, I expect rates to be volatile, but the thing is the price matters more to your payment than the rate. So I know it's easy for the loan guy to say, don't worry about the rate. Don't worry about the rate. But seriously, between 1/8% to say 0.5%, it's not that big of a change in your payment. getting your price lower or negotiating price, that does matter. Insurance quotes will matter more than anything. Shop insurance. So insurance is one of the most wildest things right now in the current market, because you look at California where they're losing providers, Florida, Texas. There's other states where they're losing providers that won't write insurance in states.
Mm-hmm.
The cost of that insurance is going up. The risk is there. I've never seen anything like it in my 18 years. I used to be so good at estimating insurance. Now I'm just like, hey, I'm just a dumb loan officer. I'm going to give you my best estimate. And I do try to get people a couple of quotes, not only out of convenience for them, but also to know up front. Because if they've had a claim, if the age of that roof is old, or they're so far away from a fire hydrant, then maybe, like if I'm pre-approving them for that price range and they're looking at a home, I'm trying to get the best idea. Like, does it actually fit the budget still, or is that insurance going to blow it out? And change how much they need to pay at closing. So insurance is a huge one. So that's why I'm saying rate is definitely one of the, we'll get caught in this range, but for now in the foreseeable future, the biggest thing that's going to cost the most is both the price and then the insurance. And then depending on where you're buying, the taxes obviously are going to be, it'd be a big difference too. So, but if you're like my wife, you're paying for the school district. So.
Yeah. Heard. Felt. Can we probably should have done this in the beginning. We probably should have done this in the beginning, but I just want to take a moment to run through the criteria for eligibility for VA home loan. It's because we deal with guard and reservists, so it's a little bit different, but it's 90 days active duty, correct? And then I think
91. Yep.
91 days of continuous Title 10 service. And then
during wartime.
Yes. Yeah. That's a big one. So like trade
or 181 during peacetime.
Mm-hmm.
Okay.
And in chapter 2 of the VA Learner Handbook, it'll tell you, like, it'll give you those ranges. It'll give you those periods.
Good to know. But I think the other big one for guard and reservists is you still qualify for it if you do 6 years, your first 6-year block, and you have a good 6 years. You're also qualified to use it. So a lot of guys who don't end up deploying that have been in for 6 years, I think that can also qualify them. So I just wanted to run down the checklist.
Yeah, so that's a common one. So the easy answer is 6 years. What you got to make sure of is that you've earned all your points for the 6 years.
Right.
Because if you've missed drill or whatever, then you may not have enough points. So when you provide that statement of points, statement of service, or the point statement, then it depends on what that says.
Okay.
And so then we submit that with the to the VA, and then they'll process the application.
Cool.
Same thing with the DD 214. But and if you have, a lot of times we'll get it automated. So when we ordered it, most of them are automated anymore. But 1 out of 10, it says, like for my wife, we've done numerous VA loans, and for whatever reason, I can't get an automated certificate of eligibility for her. I have to submit her DD 214 every time,
Oh, wow.
Mm-hmm.
So, if it's our own, it's a little less annoying, but
And Brad, this is my last question, Hal. So if you're a veteran out there, some veterans like going to the assumable veterans loan, let's say a veteran's fallen on hard times. How fast is it or easy is for someone to use their certificate on another property that a veteran's losing, basically swapping it out?
That's a great question. So I love VA assumability. There was a point I did a year research on this thing because I didn't understand it. So took a whole year and did a cool spreadsheet to show people how much money they're saving if they bought a veteran's home and took over that VA loan, especially if the current interest rates are higher than what that VA loan is. So for one, if you're not a veteran, then I say that most people watching this are going to be veterans.
Mm-hmm.
Non-veterans can assume VA loans. You just got to make sure that release of mortgage liability is signed, because lenders will forget to have you sign that. You must sign that release of mortgage liability. That way you're not responsible if they default, but your entitlement is still attached to that loan. So if they do default, that part of your entitlement is going to be gone or need to be, restored through the VA. Okay. If it's another eligible veteran, then they're taking over the loan exactly where the loan is. Okay. At least, and anybody that assumes that that's what's going on. But then their entitlement replaces your entitlement, and you still want to sign that release of mortgage liability. But that's part of the challenge in today's market is, let's say somebody owes $250 and, they're selling it for $500. Well, the challenge is you have to come in with $250,000 to bridge that difference. So that's what the biggest deterrent of it is, because at $250, somebody has 2.25%. Who wouldn't want that loan?
Right.
But you got to bring the difference of the $500 price versus the $250 owed, which is that $250 difference.
What if in a situation where they're actually losing the home and you can just take over the loan?
That can be done too. So the difference with that is it doesn't work through somebody like me that originates loans. All of that is done through the current servicer of the loan. So even though I may have closed it, used a lender, they may have sold it. They may have sold it again. Whoever currently has the servicing is who processes that application for the buyer, whoever's going to take it over, right? Costs aren't much. If it's a veteran with a service-connected disability, no funding fee. If it's a non-veteran or veteran without a service-connected disability, it's a 0.5% funding fee, so not much. It's a brilliant thing to do. Another challenge to it is, depending on the servicer, it could take a long time. And veterans have to know that going in, because it sounds great, right? Especially if you're PCSing, you move into a veteran-heavy area, then or retiring and taking a job in a veteran-heavy area where there's a lot of VA loans, right? People are, transit, moving in and out. Here's this great 2.5% VA loan, but you need to get something now because you want to move in it. But if, let's say, I'm not going to name drop people, but let's say it's a servicer that's been really bad about this, and it takes long for them to process your application. The reason is because they want that 2.5% paid off. They want to relend it, at 6.25% to 7.5%. They don't want to just keep earning 2.5%. So they delay it. And there's no recourse to that. I've called the VA and they said, you know what? The thing is they have 30 days to make a decision. And if they decide, hey, I need to ask you for your blood type, whatever it is, right? And then the buyer, whoever's buying it, provides it, they can take 30 more days to review that. And then require another thing. Like, oh, your pay stubs are now outdated. Well, yeah, shocker. It's taken you 2-3 months. Like, I had one where I had a veteran buying in Missouri, trying to sell in California. They were letting somebody assume the loan, but they had to get it off. I couldn't qualify them without releasing that mortgage. 13 months it took for them to process that the assumption. So they worked something out and let them move in and pay rent. So it worked out, but it totally blocked them from buying until it actually closed. Mm-hmm. And 13 months. So it's still worth exploring because it's brilliant. At a minimum, if you own a home and you have a low rate with a VA loan, market it. Say, hey, buy this home, potentially get 2.5% or whatever it is. Mm-hmm. It doesn't mean you have to do it, but that's going to attract a lot of buyers. So take advantage of that. And if you're someone buying, it's certainly worth looking into, but find out who has the current mortgage and find out how long it's going to take them to do the assumption if that's the route you go.
Okay.
Good to know. Well, Brandon, we could probably go into little nuances all day. It's just awesome that your organization exists and is kind of a hub for people to go get answers. I think that's incredible. I think it's probably super underutilized, and hopefully folks that see this will bring their questions to you guys. I want to thank Brandon for being here with us today and playing along and answering all our questions. And, we look forward to talking with you in the future, maybe have you come on and do some more training, or, do another one of these in a few months or something. But it was just great meeting you and great having you.
Well,
Yes,
thanks
thank
for
you,
having me.
Brandon.
Can I throw in one more thing?
Absolutely.
All right. So if you are a veteran and you have a current VA loan, especially in the last few years where you've paid these little bit higher rates than the last several years, I know, I'm not going to say you probably are. I know you're getting a ton of solicitation in the mail, if not text and phone calls. Again, just like starting the home buying process, find somebody you trust, because the one thing that people won't tell you is what your loan cost. And from a financial standpoint, it's important for me to make sure that my client knows, how, based on how long they plan on keeping the loan, but what's the break-even point is what I call it, which is the amount of cost divided by the savings. The VA standard is 36 months. To me, that's too long. That's too long. Even if you plan on living there longer than 3 years, 36 months is too long, because I think we will be able to refinance in the next 9 to 18 months, right? So find a savings that minimizes the cost, because we want to be able to, I prefer it if it's zero. I like the loan that's a no-brainer, like, oh, I'm saving $200 a month and I'm not netting any cost. There's always cost, but there may be enough credit to pay those. So we have to be careful. We can't say no cost. That's actually illegal to say, but no net cost, because in the break-even points, the day you close the loan, you're saving $200 a month. And it's always like, what's the trick, Brandon? I'm like, there's no trick. It's just, and it's a little bit higher rate. So it leaves you some room to do it again if rates continue to drop. But at least now you're not paying 2 sets of closing costs.
Sure. But
you'll get this solicitation. You'll get people that try to talk you into it. Like, you're paying 7.5%. Let's do this rate. And then they're charging all these fees. And yeah, it may meet the VA's 36-month recoupment requirement, but don't overpay fees for a savings, because if you refinance the next 9 to 18 months, whatever you just paid for that rate, it's gone. And you only had the savings for how many months? 9 to 18 or whatever. Mm-hmm. So you be really careful about that. And plus then they're just packing it on your loan, because the VA doesn't really have a standard for that. So you got to be real careful about that. And then recoupment is 36-month, for the savings, but also the seasoning is you have to wait at least 210 days past your first payment date and made 6 payments, which normally that's covered. But, some people, did deferments right after they bought homes and didn't make 6 payments. But 210 days after that. And again, you can plan and prepare. Like I'm telling a lot of my clients that I could probably save them some money, but I just don't want to charge them for the rate if I think any day or the next 3 months, I don't want to string them out, but I want to make sure they get a good loan. Yeah. And they're like, sounds good, Brandon, let me know. Meanwhile, they have all this noise going on with text calls and mailers that they're getting, that's offering these rates and things where they do not share how much it costs. And it looks attractive, and it's called a ball, and then try to give you a loan where they're overcharging you, and you just got to be careful of that stuff. So,
yeah, no, good to know. Is there anything else that you want to go over that you think's we didn't get to?
St. Louis Cardinals need a new manager and GM. I don't know if we can do anything about that, but that would, for a guy that can't watch a lot of baseball, it would make me happy to watch the Cardinals have a better record, but it is what it is.
Fair enough. Fair enough. Yeah, I'm 10 minutes from downtown, so I feel that.
I could throw in another thing if you want.
Yeah, go ahead.
When it comes to the flexibility of credit for the VA, you got to keep in mind, like in Chapter 4 of the VA Lender Handbook, it uses the word generally a lot because they give the underwriter so much discretion. So you could say, oh, well, this should work for VA. It might work, but a lender may have an overlay or the underwriter may look at things differently. So when it comes to adverse credit, there's actually a paragraph for that in the VA Lender Handbook, Chapter 4. They want you to typically generally have a clean 12-month history. So even though you may have some past issues, if you have a clean last 12-month history, even if you're in a Chapter 13 bankruptcy, if the last 12 payments have been paid on time and everything is clean, then you should be eligible per your credit for a VA loan. Do not let people tell you otherwise. Okay? There is, even if your score is low, the VA does not have a minimum credit score. Now, lenders do. It's the most common overlay, but some will go down to a 530 credit score. Okay? It may not be the best loan, but maybe it's better than overpaying for rent. You know, maybe it's worth it for you and your kids and your family to be homeowners, you know, versus renting and have a lot of uncertainty and, you know, can't get out of a situation. But don't let people discourage you, and don't discourage yourself without checking, because again, you may have had some issues, but if your last 12 months is clean, you should be able to qualify for VA loan. And even with some derogatory in the last 12 months, if there's extenuating circumstances or it can prove that it may not happen again, an underwriter may still use their discretion to approve you. And if the answer is no, at least you know, and you know what to plan for, because again, it's never too early to start planning and getting qualified. So keep that in mind around adverse credit. Great.
Sounds good.
All right, man. No, it's good stuff. It's all good stuff, and I'm sure it's going to help a bunch of people. I get asked more about the VA home loan than just about anything, especially from the younger soldiers. You know, if it's a retirement or something, obviously it's a different crowd, different questions. But for the younger soldiers, this is by far the big one. So it's great to know that you're out there as a resource, and you guys are doing what you're doing. Appreciate it, man. Appreciate you being here.
Oh, thanks for having me, man. I love the opportunity. And as you can tell, I could find something to keep carrying on about. If we're here long enough, I would find something.
Right on. Well, we'd love to have you back. So anytime you want to come on and put some information out, we're here for you.
Yeah,
exactly. Give
if
us a
anybody
VA
wants to
update.
contact me, what's that now?
I was anytime you want to come back and give us a VA update on any kind of legislation change to the VA process, please do. Please come back.
Yeah, well, I mean, the trigger leads, it's a whole other conversation. That's just a national thing for consumers. But, you know, one thing in Missouri is just working on cleaning up that tax exemption. And, you know, in my free time, you know, working on that. But, you know, but if anybody wants to contact me, you know, Brandon at VAMortgageGuru.com or my cell phone. I know how to ignore it if it's the wrong time. So call me anytime. If it's the wrong time, I won't answer, and I'll just reply when I can. But 573-356-1101. And, you know, I love being a small piece of a bigger picture, and anything we can do like this, VettedVA, you know, yellow ribbon programs like we used to do. I mean, anything is an opportunity to, you know, help a veteran some way or another. So I appreciate you guys.
Awesome. All right, guys. Well, that's our show for today. Thanks for joining us. And another thank you to Brandon. Thanks.
Right.
See you next
time. Thanks, guys.